Hey, Kevin here, top 1 financial advisor, two-time author, one-time bestseller, and we are here to talk about the stock market. I want to answer the question of how do corporate taxes affect the stock market? It is an interesting question. It's one that you guys asked, so I want to answer it. And the reason why this is really important right now is because should the infrastructure plan get passed, well, the way to pay for that is to raise taxes, or at least that's what people are telling us on the Hill. So let's go ahead and break it down. Two things, housekeeping. Number one, go ahead and hit the share button. You want to do that. Take attendance, if you will. It don't cost you much. I'm looking for 10 shares. That's it. So go ahead and hit that share button. But number two, for those who may be new, got a master's from UT Austin. I got my first degree in economics from Hampton University. So this is like not blogger random talk about stock, not about stocks, which is always what we talk about, but taxes and the economy and all that kind of stuff. This is like, I went to school for this. So don't get in the comments saying nothing crazy unless you got some legitimate facts to back it up, just because you'll see where this will go. All right, so here's how it works. So I'm going to break it down. Yes, it can be chapters long. I'm not going to go there. We're going to make it real short, simple, and sweet. All right, so how do taxes affect the stock market? So generally in the short term being like 3 months or so, when taxes go up, stock market goes down. When taxes go down, stock market goes up. Why is that? Because as an investor, let's say I don't know why I pick on Coca-Cola, I just do. But if I'm Coca-Cola, I'm making billions of dollars a year and I save money on my taxes because you cut my corporate taxes, well, I'm going to be more profitable. Just easy. Reason why that's the case, is because I'm spending less money on taxes. That's more money that goes in my pocket. I'm good. And if I'm good and I look more profitable, my stock goes up. That's pretty much how it works. On the opposite end of things, if taxes go up, then that I am less profitable. That's money I could have had and I now don't have that. Then my profit goes down and my shares look worse and I lose a bit of money in the short term. But that's how it pretty much goes, except for this. Generally, at least from some political spheres, and I'll leave that alone, but in some political circles, people say that when you cut taxes, businesses can hire more because you save that $1 million, right? If you save that money, if you're a smart business person, you're going to buy more computers, open up a new factory, hire more people. That makes sense, except that it doesn't actually happen. If you go back and look at all the tax cuts, at least I think since like Reagan, if you go back and look, you'll see that companies actually don't hire as much. And what they actually do with that extra money is it goes to CEO bonuses, it goes to existing employee bonuses to a degree. Sometimes you see temporary, like, here's one lump sum bonus, not a continuation of a higher salary. You also tend to see stock buybacks, which don't actually improve the company. It helps us as investors, which again, short term is great for investors, but it doesn't actually help the company. For example, if you're looking at something like an American Airlines or a Delta, but particularly American, because this was in the news this time last year, when the Tax Cut and Jobs Act was passed, I think in 2016 or so, you had 2016 and, asterisks there, 2016, 17, 18. You had a tax cut, you should have saved money, right? You should have done more stuff. However, American Airlines instead spent money on share buybacks, and when the economy crashed for the most part for COVID-19, they didn't have any money. They're like, we need a bailout. Well, it's like, well, you technically had a bailout. You weren't paying taxes. I'm sorry. You paid less taxes over the last 2.5 years. Where did that money go? Oh, we spent it on stock. Why didn't you spend it on giving employees more money? If you gave your employees more money, they'd have more savings. They wouldn't be hurt as much as what they were when they got fired or when they got laid off. That's kind of how math works. But also, a lot of times when you cut taxes, that money just stays there, right? It's just, hey, I save money, it's going to sit in the bank. I'm not necessarily incentivized to go hire more people because that's going to cost me more money, right? So if I got $1 million, why not just have 1 million as opposed to hiring people and me cutting down on millions? So that's kind of how in practice, that's what actually happens. Logically, it makes sense, but in practice, companies tend to hold on to that money. They tend to buy back their own shares. They tend to give bonuses to high-ranking employees and CEOs. It's not fair. It's not fun, but that's what the data actually shows us what happens. So what happens when taxes go up, when you raise taxes? So first of all, I should have did this in the very beginning. Remember, taxes are how the government primarily makes money. It is their salary. When they cut taxes for everybody, the government is cutting their own salary. When they raise taxes, they're increasing their own salary. What you have to realize though is when our governments particularly increase taxes, they actually increase their salary. When they increase their salary though, the government pretty much has to spend that money. Government spending is what really drives the economy. It is the biggest flip of the switch to get you out of a recession. It's the biggest flip of the switch to push people out of poverty, to actually increase share prices too, which is strange, but most people don't think about it. And that's what really starts the market and really like gives everything its engine, even though most people don't think about it. For example, where did Microsoft get that $21 billion contract? U.S. Army, which is funded by taxes, right? If we get this, the infrastructure plan, which is like $2 trillion, that's going to break down. That money has to go somewhere. Who's going to benefit from that? Us. If you end up working for, let's say, a construction company that builds the highway, you're going to get paid for that. Your company that works for you is going to get that government contract. They have to go buy stuff like Caterpillar cranes or whatever they make. You know what I'm talking about. John Deere farm equipment. They have to buy that stuff. United Rentals. They have to buy all that stuff and then hire you to get it done. So companies still benefit when taxes go up, even though in the short term, it doesn't feel like it. Another big example that we're all seeing right now, COVID-19. The US government is paying $39 per vaccine to companies like Moderna, Johnson & Johnson, and Pfizer, all companies that have been up. Now, Pfizer and Johnson & Johnson, because they're huge companies, they're not like jumping and going up 200% like Moderna did like last year or so. But you get where I'm going here. When the government spends money on it, those companies still benefit and those employees still benefit. Because I can almost bet you Johnson Johnson was hiring everybody they could to get this vaccine out, right? Because they're like, here's $1 billion from the US government. You need to figure this out and quick. So they got to hire people, put more research into it, get their supply chain right, and get everything right now. Because they had that money from the government, they had to hire more people, they had to get it right. Those three companies are the first ones that were beneficiaries from something like government spending. You did not hear about Moderna before COVID-19. None of us did. It is here because of government spending. If it remains here, we'll see after that, which has always been my concern for a long time for Moderna. But that's how things basically work. Now, if you want to get into the debt versus deficit conversation, you can make a comment. We can make a video on that. That's a little more nuanced than what most people think, because the government is not like you and I, where it's just like you just swiping a credit card. It's not exactly the same. But that's a conversation for another day. But that's how it generally works. Typically in practice, even though it's backwards, because to me, if you raise my taxes as an individual, I'm not gonna be happy about that at all. At all. But in practice for a company, if you actually raise their taxes and you spend, if the government spends the money correctly, which is a whole different story too, they spend the money correctly, like in things that actually improve the country, like infrastructure, better airports, better schools, all that kind of stuff, we all benefit. Society benefits from it and those companies benefit from it, which means investors benefit from it. Another good example is, let's say they raised taxes or just spent money on classroom computers or better Wi-Fi. I think better national Wi-Fi was something that was inside of the infrastructure plan. Guess who benefits? Verizon benefits, T-Mobile, AT&T. Those are three companies that can benefit because they're one of the biggest service providers of that. If you start to increase Wi-Fi, guess what else you do? You increase the need to buy computers. So Microsoft is going to benefit from that. Apple could benefit from that. Google could benefit from that because they have Android phones. So people who live in regions that don't have Wi-Fi and now they get it, you as an investor are going to benefit because now the government is going to say, look, here's $1 billion to AT&T, to T-Mobile, Sprint is merged with T-Mobile, Verizon is the one I'm thinking about. Here's $1 billion for each of y'all. Go put Wi-Fi in the middle of Wyoming. People in Wyoming get Wi-Fi now. I'm sorry, Wyoming. I don't know if you have Wi-Fi or not. I'm picking on a random state. I'm sorry. But they get Wi-Fi now, and now they want to get the latest iPhone that's on 5G. So Apple gets paid for this, right? And what do they use their Apple phone to do? They go and search on Google and go to Amazon to buy stuff from Amazon now. And now Amazon goes up because they have a brand new market. So on all these levels, the economy and all these companies, we kind of all win, which sounds backwards, but in practice, this is what actually happened. You can go back to the New Deal. You can go back to the 2008 stimulus stuff that we did back then. That's what kind of pulled us out. Most economists agree that we probably didn't actually do enough, but those things actually help. So it's government spending, if you do it correctly, keyword correctly, is what's going to help actually push the economy out of where we are now and benefit companies. So it's going to hurt in the short term. I will tell you that. Should the plan get raised, or should taxes get raised and the plan go through, in the very short term, the stock market is going to say, no, we don't like this. But in the long term, it's like, oh, wait a minute. Microsoft got a contract, and Moderna got a contract, and Johnson & Johnson got a contract, and Caterpillar got a contract, and John Deere got a contract. Oh, these are great investments. I'm telling you right now, should it pass, and we don't know if it will, should it pass, should there be a tax hike, you're going to be able to find some good value, because all short-term shock. And what most people think is, my taxes are going to go up from 21% to 28% like that. That's actually not how it happens. It's usually phased out, and you know well in advance when that's going to happen. So that is the truth about how taxes affect the stock market. I was probably talking a little too fast. I apologize if I was, but I wanted to make sure the video was like digestible. I didn't want to sit here and make it like a college class where I'm like drawing terribly on the board. So let me know if that made sense to you. So yeah, that was great. You might want to run that back again or just talk slower. So let me know what you think in the comments below. If you have any other suggestions about what we should talk about next, feel free to let me know. Before I let you go, 2 notes I want to, because I've been taking notes. So when y'all say stuff, I take it and I put it in a list so I don't skip it. So I know we want to talk about AT&T and T-Mobile, AMD and Micron, Zoom, Google, and Microsoft, because they're all in the video space. So any other companies that I missed, make sure that you like put it in there as the first episode, a general economic concept. Feel free to put all that stuff there, and I'm more than willing to add it to the list and do it as we go. So this is one I wanted to tackle, one that y'all had asked. I think someone asked this on Facebook a few weeks ago, so I want to throw it out there. Lastly, make sure that you get your tickets to the Millennials Next Door 2021 Investing Conference. Is the 3rd annual. I've been at all 3. Which it doesn't feel like it. I feel like we started last year, but it has been 3. Tickets are only $75. That link will be above. I am teaching a session on how you can invest like a champion and how to go from confused to confident, because that's the key. A lot of people know what they want to do. You know you want to create generational wealth, but you don't really know what buttons to push, and you're a little afraid because you don't want to lose money. I get that. So I'm going to help you do that in my session. There are, I think, 8 of us total. So there's 7 extra or other experts rather on. Tila Holcomb's doing option trading. I showed you guys the page yesterday. You got real estate investing. You got ETFs. It's going to be good, and it's worth way more than $75. I'll tell you that now. But early bird tickets are already gone. So you want to sign up right now. All right. That's it for me. I'll talk to you guys later.